Hi, today's topic for discussion is rebalancing one's debt portfolio after this pandemic. COVID-19 has accelerated a long-running trend of lowering interest rates in India. After the pandemic hit, even the RBI eased liquidity and reduced bond yields as early as April 2020. Most investors who invest into debt funds would have noticed that their fresh investments into the same debt funds would be giving significantly lower yield than was being given earlier. Reasons for this are very apparent, that there was a lot less liquidity in the economy and that there was a crunch in terms of returns that could be given from public sector bonds as well as private sector, because most businesses had taken a hit. In order for one to understand how to optimize returns into a debt portfolio, one would have to consider getting into the hybrid category. The hybrid category would optimize returns because of a slight exposure into the equity markets, and therefore would then give you a slightly higher return in terms of previously across the broad category of debt funds. The range of returns would be from maybe 6 to 8-9%, depending on the duration of the papers invested into. But after the pandemic, majority of the range of yield and returns falls between the 4 to 6.5% category. And in most cases, such low returns are not favorable for investors and generally throw a hurdle in terms of their long-term investment goals. In order to optimize returns, investors should now consider looking into hybrid funds. The advantages of the hybrid funds are that they have a portion of an equity element in it that can help optimize returns and restore the portfolio to the growth rate that was intended. The two types of hybrid funds we will be discussing today are hybrid conservative funds and balanced advantage funds. The reason we have picked these two categories in order to optimize the portfolio is for two reasons. For very safe debt investors who have a short-term capital requirement and would not like to take much risk, only a small portion of the capital should be invested into equity so that there is no erosion of the principal amount in case of a market correction. And for the investors who have a longer-term horizon, which is between 2 to 3 years, then we would recommend balanced advantage funds due to the dynamic nature and the fact that they do a lot of rebalancing of the portfolio internally based on market conditions. This means that in balanced advantage funds, when market levels are high, the equity portion in these funds would be something as low as 30%. But when market levels are low, then the equity element of these investments can go something as high as 70 to 80%. Therefore, in the longer term, balanced advantage funds can pose to be a great addition to the portfolio and diversify in terms of returns. Secondly, for the investors who have a shorter time horizon and who have a capital requirement, they can consider hybrid conservative funds, because in these funds, a maximum of 30% is only allocated towards equity. The debt element can be even greater than this, but a maximum amount of 30% will only be exposed to equity. So in case there are fluctuations in market levels, the value of the investment will only be fluctuating to a very small extent in comparison to other funds. Therefore, one must take a careful look at their debt portfolio and understand what their long-term goals were in terms of growth rates as well as values, and definitely consider hybrid funds as a new addition to the portfolio in order to achieve these goals. So therefore, to conclude, one must look into diversifying into hybrid funds in order to achieve one's goals. And then the choice of whether it's a hybrid conservative fund or balanced advantage fund can be arrived at simply considering your risk appetite and your time horizon.